looks like because it's a Friday, we're not gonna have too many people here. Hello, everybody, to those who showed up. Olimiu, of course, Mama, Kay. Good to see everybody. Leo. I was about to actually skip this one. I'm not gonna lie. Feeling a bit fat after eating a burger. Not gonna lie, but it is just such a unique day that I felt like I cannot. I really wanted to go live and actually maybe just hang out with you a little bit, boys and girls, those who choose to show up. We had and a crazy day. Hi, Christoph. Good to see you here, brother. Good to see you. You never come and show and hang out with us in voice. The most active admin on Discord that never has a second for us on voice. How is that? Um, No fully green market day. Smash the like, or your stock will go up forever. Righty. Thank you for that, brother. Um, well, it's first of all, we are all preview to what's going on. We spoke about this. We can easily see 6,000. We said that kind of resides where that range is, so not all that surprising. But how sustainable is this nonsense? Hey, Danny, good to see you, man. Good to see you. Thank you for showing up. How sustainable is this bullshit? Well, it's not. This is not sustainable. Do I really have to say how nonsensical this is? Tell you what. Look, we are objectively scratching the very limits on all the time frame, larger time frames, which in essence matter to us. We've been seeing the build up to this one for quite a while, and yes, we are able, or are now able, we're able throughout the day today. We squeeze over basically above the resistance line, the trend line. Now, how likely is it that we are going to correct, right now? Probably not that much, right? But if we start working our way in reverse this time, unlike we usually do, we start at the smaller time frames and we go up. Let's try to do the reverse thing, and what we'll realize basically the market is getting ready, it's prepped up, and we're already starting to see the signs on all the larger time frames that actually matter, right? So the smaller time frames in which we're probably seeing a little bit more bullishness, as you can tell, on their own individual channel, which is basically the same as zooming in on the current channel that we have, with a slight larger discrepancy, if you will, a larger margin of error. So as you can see, we get a little bit of a wider channel. Yes, potentially we can squeeze a little bit more of that, but you have to be realistic. And I mean, you don't have to be anything, but I'm going to talk out of my own experience. This will get closed regardless on our way down to close this, which is basically abnormal and is not sustainable and is not going to stay around and will get closed. Okay, so we're talking here about 110-ish points. So this thing is going to get closed. Okay, so we have to be a bit more realistic about this thing. And when we will start correcting based upon what we're seeing on the more so larger time frames that are indicating that we're already squeezing the bejesus out and right about to start correcting, you cannot say I didn't warn or say. I saw Tom Lee talking about another 5 to 10% by the end of the year. This man is completely insane. I mean, I don't know. Look, Danny, originally, by the way, which I have to give him a lot of credit, what people tend to forget is, which I was not fully aware, is that during COVID, actually, during the bottom, I was predicting the bottom and the market to rally. And unbeknownst to me, which I wasn't paying attention, really was too busy with the community, with the market, with my own analysis, with me myself making sure I'm not gonna go insane and thinking the life is gonna come to an end somehow. He made the same prediction, so already it gives him enough credence with regards to not just people like to tend to call him perma bull. Well, he knew when to be right. It's not just about, well, always up, so eventually you're going to be right, or most of the time you're going to be right, actually. He understood, I think, and I do think he's very knowledgeable and probably knows exactly what's going on, but the way he sees it is that there is more opportunity to squeeze out. Cool, let's squeeze out more. More so, if we are ahead of very bad for a very prolonged period of time, very bad times, then you better get into this with the biggest reserve you can humanly, obtain before it actually comes about. So it doesn't surprise me that as long as the bullish sentiment is being retained, he will, first of all, it will make him appear to be a lot more credible. And of course, he will be able to squeeze more out of the market. Now, when I look at the monthly chart, do I see that on this monthly structure, for example, right? Can we squeeze? Well, on the weekly, sorry, yeah, no, that one is the one I'm looking for. 1 second. Yeah, there we go. That's kind of. Can we squeeze out of this another 5 to 10% before the end of the year? What we can have, what is going to be not completely abnormal, is somehow 2 more candles, whether one of them will be red, for example, as such, and then one of them will be green as such, which will result in maybe this sort of behavior we said, right? Which falls into the framework of this perfectly, right? Well, actually, not even, say 5 to 10%. Can we really squeeze legitimately 5 to 10 more percent? I honestly doubt it. I honestly doubt it based on the structure that we're already starting to have on the smaller time frames, bringing us lower, right? Entering oversold territory. Remember, as we were climbing up, every time we had another boost of momentum, I was not biased and I was telling you, look, guys, yes, there is more bullish momentum and we can squeeze all the way to 6, right? It's definitely possible. We ended up doing it. In fact, I said we're probably going to have a small correction before. We got it. We made a move to the upside. We got it. Right now, the structure as is, with this lack of momentum, or rather deteriorating bullish momentum on what we can see the hourly, which will dictate basically the upcoming hours, right? But if we look objectively at this, right, we've reached overbought territory. Makes sense. This is why we got this amplified wave. You can see the meaning of what it really means where you enter overbought territory, right? You actually amplify whatever craziness you already had, you even go further on top of it, right? But you can see here this convergence and divergence is already not hinting at anything good. Don't be fooled to think that the market is forced to do this. The market can look like this, right? Or have divergent forces, so much so that we will be able to perceive that we'll have more momentum. But we can see on this that we're starting to run out. The 4-hourly is basically very similarly to the daily. The daily, unlike, well, the 4-hourly, seems to be a lot more bullish and appears that we have a lot more momentum. But is that enough to squeeze out 5 to 10 more percent of the market? Well, not really. If we will be lucky, we may be going to be able to squeeze out maybe 1 more or 2 more percent in the upcoming sessions. And for all I see, we're going to at least then stumble upon a resistance. Will we be able to break out of that resistance? I highly doubt it. That means we can still stay on that level, testing maybe 2 to 3% at best, right? Being where we are at best, testing the resistance, but eventually breaking down, because if you start looking on larger time frames, they're already starting to print that convergence divergence, which in essence brings you lower enough to close these gaps. And once we get locked, and some of these gaps are already getting locked and testing that median support that we have, and usually when we test median, we end up doing it for a while. So what I'm seeing, Trump can only fix so much of underlying issues. Well, look, actually, I do believe Trump can fix the vast majority of issues we have on our plate right now on the table. It's just that he's not a magician in that sense that it cannot be done within a short period of time. More so, there's a lot more damage that was hidden by the previous administration. I don't know if you've seen, for example, a headline, and that's something that sort of traces back right to my little rant about JP doing all the wrong things he could have done. We're talking about Jerome Powell, head Fed chair. share, uh, excuse me, English much, right? So, JP basically said how Trump cannot fire him under law, which is, by the way, not true. All he can do, he file a motion basically through the government and prove that JP is being inefficient for the current economic situation, and then eventually could be impeached, if you will, right? Removed from his position, fired, which seems to be weird on all aspects. I mean, considering the fact that he was actually chosen in the previous administration, considering the fact that he was supposed to be a Republican and non-Republican. But if you look at at face value, at actual facts, how he ended up behaving and how badly he ended up disappointing the smartest minds around the industry, all realizing that they haven't done enough and inflation is not stifled and we can all still feel it, and we will feel it for a long time, in fact. It's just that now the job market's suffering very badly. Everything is suffering around. Oil prices are still extremely high. And the only thing that's potentially going to be solved by Trump is slowly starting to maybe subside some of that geopolitical tension, potentially bringing about more stable oil prices, which means oil will not skyrocket to 100 tomorrow or in a week or in a month, right? Of course, not tomorrow. But in essence, it does not change any of the underlying conditions that we had prior to. It just calms things down for a longer period. We still need to resolve inflation. We still need to resolve the job market, basically, in the US. And so, as much as I do expect from Trump, as you said, he's not a magician. But I do foresee how he can solve a lot of these issues, mitigating the potential effects of the pain. Now, that does not change the technicals that we're seeing. If you're a bit more familiar with the harmonic patterns and the harmonic structure, I'm so sorry if you can hear that. My cat really wants something now. I'm so sorry. Okay, give me a sec. Sorry, my cat decided to terrorize me while mid-live, of course. My God, she is terrorizing my door. This is just insane. But so I do think, in my assessment, that Trump can actually keep things better and improve the potential pain that we're gonna have. But if you look at technicals, and once we start the process of correcting, more so people will rely on these technicals because there is no underlying reason, while seeing everything supposedly getting better, but not realizing that basically that improvement process is somewhat painful, right? And so basically, what we are seeing on the technicals, in fact, almost implies the perception of the market for the next upcoming potentially up to 2 years, in my point of view. From my point of view, if we're looking at the 12-month chart, which is basically the scariest one that we're having, basically the chart that saying all along we've been turning around, and more so this is not sustainable. This is just pure insanity, of course. More so structurally, this is very abnormal. Maybe would have seen, actually it is far more normal than not, but abnormal at the same time, deviating so much so from the trend. It will be remembered maybe one of the weirdest times that we had in terms of how the price action behaves around the trends. But at the end of the day, it's not like we have not seen exceptions. And those who are not familiar, actually, this is exactly the type of performance of the market we refer to when we say the market can stay irrational longer than we can stay solvent. Now, does that change anything that what we're seeing here right now? As you can see, with all the bullish momentum that we've seen, it brought about a little bit more convergence of the two forces and sort of slowed it down. Can it completely mitigate and cancel it? I can tell you that actually, while this structure was building up, we saw a similar phenomenon. It's just that since then it readjusted when the market became extremely bearish, and then we ended up with this sort of structure, because this structure does not get updated other than once a year, basically, which means we're gonna see this structure update within about or get locked within about a month and 24 days when we have the year finalized and locked. But it does not change the overall structure that we have. That means the very next candlestick could be the one to start bringing us downwards, which, yes, implies exactly what we're saying, that the market has another period of basically 2 months in which it can still outperform and have more bullish momentum. The problem is, those who think, oh, that means a huge rally that I'm going to be missing out, more often than not, that momentum is going to be spent on testing the previous resistances. Exactly the resistances we brought about and spoke about earlier, including the gaps that we've generated before. So it's almost like we have the market already laid out a plan of how it's going to burn the time that is left before the end of the year without actually going too high. So that kind of goes into what people when people ask me about the 6,000 area in which we are right now. 6,000 is a tremendously strong resistance. It does not mean we're not going to see the market go above it whatsoever. Again, that's not how the market works. But in my opinion, what we will see is the entanglement of the price action within the 6,000 region where we are at right now, retesting it, potentially closing some of these gaps, retesting some of these areas back and forth within the next month and a half. And sadly, if that's how far they will be able to prolong it, and only next year, only in the beginning of next year, is when we're going to see, basically in about 2 months, is when we're going to see the actual bullish momentum start to take over. Yes, that is a real possibility. Now, does that mean we're looking at a missed gigantic rally, as I just explained? Probably not. Probably what we end up here is retesting the previous levels that we've gone through before, and eventually getting rejected by them. Again, that's my assumption based upon what we're seeing on the indicators. Remember, some of the closer ones to the shorter time frame look, well, as if there is a little bit more to squeeze. The larger ones are indicating for upcoming pain just around the corner. I know I've been saying that for some time now. Originally, when I started predicting this, I was basically saying that, look, this is going to happen soon. You better get ready. I was warning for an entire month, basically saying, look, this is going to happen any moment now. And we are at the stage where it is literally about to happen any moment now. The fact that we are aware there's higher probability for it to being prolonged towards the end of the year does not mean that that's actually going to happen. It just can happen any random Monday or Tuesday between now and then. Just to be clear, right? Because what will happen on the yearly chart is that this abnormal gigantic candlestick will be slightly eaten away at, right? But it will not completely change the structure, meaning it will just look as if it has a tiny bit of a wick right before it locks in. So it's not going to change the structure at all, other than maybe just postpone what we're expecting to see in the market, which is a very deep correction that will last for at least a bare minimum, in my opinion, of a year. And in my opinion, maybe even more so, like I said, the bare minimum. So in my opinion, actually about 2 years, because the simple process of actually making it to the downside will last a year. And then the process within the oversold territory will last at least a year. And that is if we're lucky. Because if we're not lucky, we're going to spend within the oversold territory something more akin to this. Yes. Well, actually, let me be more precise. Sorry, I actually went completely overboard. There's something more akin to this, which can result with, well, basically 2 to 3 years spending just in oversold territory, slowly deteriorating the prices in the market, giving us the bottom only within about, well, 2 years, right? That's the bottom in 2 years, not the whole thing. So then the climb up will last at least a year or two outwards. So that's 3 to 4 years altogether is the bare minimum. My kitty is awesome, although she has razor sharp claws, basically, and even when she just plays around, she just basically leaves me full of scars and marks and whatnot. and she's a bit dominant and crazy since the other one passed away, and she requires a lot more attention. So she can randomly just can show up and just like, give me attention. I want attention. To happen when Trump is in office. Absolutely. In fact, I am surprised. Tungan Death Grip. I was actually expecting them not to be able to carry this long, and relying on the fact of the matter that most of the pain will be during Trump's administration, and actually just still relying on that and letting the market break. On the other hand, it seems like the market is tremendously euphoric. Also, you need to understand now the level of control they have is different. That means I'm not sure whether they ever had a mechanism to actually prepare it to break, other than they relied on the fact of the matter that it will make it run up so high that it will break eventually. But market being so down after COVID, well, is being euphoric like ever before. And more so, you have a lot of money managers that really have to make up for their several last bad years during COVID, and they have to outperform. And since everybody are on the cutting block basically right now, on the chopping block, and everybody trying to outperform the other, you have to outperform your peers, not just the market. Otherwise, you'll be the one to go. So they are squeezing the bejesus out of this market like I've never seen before. This is completely phenomenal. But I assure you, unlike ourselves, they're far more prepared for a break at any given moment. Their supports and resistances work far more efficiently than ours, and that's not the supports. Sorry, their stop losses and take profits, right? So and they know how to keep them up to speed at all given time. Basically, most of them use trailing stop losses, so they have the ability to retain certain trades that most of us will be out of. I mean, in this game, what can I tell you? The market makers are both sides, the referee and the crowd, so they will profit no matter what. Don't worry about them. More worry about not, as I tend to call it, is don't overstay your welcome. The market does have that weird tendency. You can ask some of our members, when they knew that a rally in a particular asset was about to happen, they've enjoyed it, participated, but then out of greed overstayed when the market was already signaling heavily that it's going to correct. It didn't happen exactly as expected, thus giving hope for these people for the rally actually to happen. And before they knew it, they were already 20% down and no longer willing to sell, hoping it will correct up. Hoping, and suddenly they're 30% down. Hoping, suddenly 40% down. And by that moment, you're definitely not going to sell. You're just now sitting and waiting, and now you're a bag holder. And last time that happened, people waited either 13 years to break even or ish, right? 12 to 13 years. Or those who are more lucky to start from the second wave, which is where we are right now, waited about 5-6 years, right? So actually, by the way, jokes aside, in the context of everything, what I'm saying when I'm saying 4 years, it's not that bad. Last time it happened, it took 6 years. So, I mean, you can hate me for saying that something unpleasant is coming and have been saying for a while, or at least, acknowledge that what I'm trying to show you here is the future, not what is actively going on. I mean, you all have eye holes to see that stuff, right? But to be able to predict something that is tremendously painful, in fact, so much more painful that it's sometimes better to not enjoy a particular rally in the market and not to be in it when the market drops, because it's going to be very severe. Because at this price, yes, we are basically looking at about 44 to 45, 46, 47 maybe percent potential of retracement on the S&P and subsequent assets and major indices. So, that is what we're expecting, boys and girls. I'm sorry for being the bearer of bad news. I promise you, for the health of my own channel, I could have started right away being tremendously bullish and just stating what we all see every day, just doing like the other YouTubers. I am trying to keep things accurate and as honest as I can see. In fact, it's not a time showing you this stuff and completely ignoring it myself. I've slowly accumulated a pretty decent position in the SQQQ, and if I didn't believe in these tools nor think they were legitimate and working, I would actually not have established a position myself. I'm not that insane. I'm not seeking to lose money, especially not being highly paid like Tom. In fact, I'm not being paid at all by YouTube because YouTube for some reason is dragging their feet with me and not really cooperating. I guess maybe it has something to do with me being from Israel. Just a guess, you know. Maybe I'm wrong, but that's what I'm feeling. Yeah, so that's what's going on. Those who want to support, by the way, the channel, me, in keep on doing this wonderful stuff, those who already support regardless and enjoy other cool benefits, you should join our Discord and, of course, Patreon, $10 a month. I believe most, probably, I'm probably rambling to them, you know, preaching to the choir. We have all our members here anyways, but yeah, definitely join in. Only $10 a month, and you will get to participate with all, you know, crazy conversations, more serious conversations, and get Discord as a resource in general, because you have various professionals there from various facets of life, ourselves that are professionals within the finance industry, and various tools, if, you know, hangouts and whatnot. Just a random conversation about food aliens or whatnot you'll get sometimes as well, discussing various assets, companies, sectors, everything and anything in between. That's it, boys and girls. I think I'm gonna adjourn this. There's not much to say. Market has already closed, so I mean we know what's up, right? All in all, considering the volume that we had pouring into the market, it seems like the market was basically selling, you know, dumping in a rate that we've never seen before, and at the same time everything was picked up so rapidly that in fact we ended up with a bullish outcome out of it all instead of bearish. And that's a bit crazy, boys and girls. Prepare for pain, lots and lots of pain. Can we look at SQQQ? Yeah, of course. There's not much to look at. I mean, we've gone through a reverse split. Those who are not up to speed, it was 5 to 1. So now we have basically every 5 shares turn into 1. And so the price got readjusted. We're located at what should be considered as 38.81 as a support resistance, if you will. For now, we're kind of residing around it. We also have a stronger support that sits at a 30.98, those who want to be more up to speed. We have the very next support, just in case you want to know, is 28.92. If we're looking on the upside, we're looking at 38.35. And if you're looking further, even higher, we're looking at 45.71. These are the major points. Does that mean we don't have any supports or resistances in between? No, that does not mean that. We have a major area right here around the 36 area. And we have another major area right here around the 43, 44 area. Somewhere like that as well. Alrighty. So that's what we have. Currently, the momentum, the most important thing that you need to realize about how the momentum is going to print. Sadly, this asset is rather new. A lot of people don't realize it's not that of an old asset. It's actually just been established at basically post the previous drop. I think it was 2011 that it was initiated. So it does not have the actual structure you're going to see on the technical analysis, the same way we oftentimes find in most of the newer assets on the weekly structure, what we oftentimes seek to find on the monthly. So really what you want to be seeking is this. And what you need to understand is that really this is not representative, okay, of why we see a buildup of momentum for the SQQQ. The way it works, it is basically the opposite. It works as a pulley system, right? That means you don't need to be buying SQQQ in crazy volume for it to be moving upside. For it to be moving to the upside, all you need to have is the TQQQ going to the downside, basically a pulley system. Well, it's not like this individually will be happening unless you'll have also relevant price action in the Qs. So you see, it all comes down to this, and it all comes down then from this to the Nasdaq. So if you really want to understand the performance of the SQQQ, you need to understand the performance of the Qs, or in other words, you need to understand what is going on with the Nasdaq, right? Which believe it or not, is printing all the same, right? All of them on the larger time frames are either already cooked or getting ready to be completely cooked, right? So, I mean, here's your monthly looking identical, and to our SPX monthly, which I don't even want to comment on this. This is, give me a sec. The cat is not letting go. Right. Since I don't have a camera, I cannot see the cat, but she might make herself known. נכון, Masha? Wow. Damn, she's tough. Cookie, make yourself known. Wow. Okay, no. Now she's just quiet. Alrighty. So that's it. I think we've covered everything, unless you guys have any particular questions. I don't think we're going to go run through the tickers, since it's a Friday and it's kind of evening and late, and everybody want to probably get to their own stuff, and I'm probably taking too much of your time anyways. But I really appreciate all of you showing up and hanging out a little bit. We definitely had an abnormal day, and I felt like I need to mark it at least, sort of, acknowledge this day. So technically, we've seen 6,000 today, guys, boys and girls. This is something we've been. This is like seeing an alien. Basically, I've been saying that all along. So throughout the session earlier in the Hangout. So yeah, that's that. Darren, we're not gonna do tickers. It's more about, like, if you guys have a question, I'm not gonna do tickers right now. Again, I think we're gonna do all that stuff either in the community, in the Discord Hangout. On the weekend, there is a members Hangout for the Patreons. I try to do one at least once a week, including the fact of the matter that I'm pretty much every day there, even in the public partition, so you can join in and hang out with me as well and ask questions. We're not going to do tickers. It was more about questions. I hope you're not too disappointed, Darren. Come and hang out with us on Discord. I'll definitely answer your questions. Thank you so much, Greg. Really appreciate your work. Thank you guys for showing up. I mean, this is just us hanging out in the community. It's like part of that process, so it has to be some. I mean, I definitely appreciate Tom putting me up to this, especially during COVID when I still have the videos to show what was the process. And obviously, when the market will correct, we're gonna have. Oh, there she is. Meow. Right? We're gonna have everybody basically saying how they knew and predicted how the market will be going down, but you guys know who truly predicted it first. Meow. Ooh, yeah. Come here. Come here. She's so adorable. Anyway, I'm gonna let her go, and I'm gonna let all of you, boys and girls, go, and I will see you on the next one. Alrighty. Bye for now. Oh.